Hey guys, quite a kangaroo market that we had this week. Looking at these daily candles here, just some crazy movements all over. Pretty much starting since last Thursday. Really Tuesday's candle is the only candle that looks somewhat decent and was really the only trend day we had all week. This sell-off looks far more impressive than it actually is. Honestly, coming from this candle on Wednesday to here, we've really only fallen a total of about 5% from this high to this low. So not a terribly big correction, but enough to kind of really set some differences here. So one big thing that I'm looking at here is that we started last week here. We came down, we lost the 820 key 405.3 support. We came down, we lost the 250. We bounced off the 100, attempted to break out back over the 50 and 100, and was absolutely smacked back down today. And not only today did we close under the 50 and 200, we officially closed back below for the first time since December down here. We closed under the 8, the 20, the 50, the 100, and the 200 EMA. This was a very, very big change of pace going from just 2 weeks ago, even just a week ago, where we were looking at potential to stay in the 400s, and now we're looking at potential to revisit the 380s as early next week. So with us losing, more importantly, not only the 200 EMA, but we retested and rejected it. I am definitely looking for a test of this 390.2 support area, 390.1. This is our major pivot area. If you flip over to the weekly here, you can see this big red solid line here is 390.1. That is our major pivot level. I talked about this all the way back in December, that pretty much we have been trading a 375-ish to about 407 range, essentially. And these gray were the extremes, which gave us a potential upside of 429 and a potential downside of about 455. I was mentioning up here that the longer we stayed up here, and if we lost this 407.7, that really we should be looking for downside. And it sure came this week pretty aggressively too. So the biggest things to note here on the weekly is this massive rising wedge that dates all the way back to October's bottom of the year. And then January consolidation support here. We had a massive move down this week. We lost the weekly 8, 50, 100, and 20 EMA. We have not closed below the 20 EMA and the 8 EMA since right here at the last week of December. So you can see generally when we start closing below these levels, we have pretty good size sell-offs. You can see right here we closed and the sell-off started. It's a pretty big key to look for a sell-off for sure. The biggest supports I'm looking at is 390.1. If we blow through 390.1, I will look for a 383 consolidation. You can see back that was a major level. However, if we happen to keep going, really 375 is going to be our biggest level. So something else I talked about a couple weeks ago was and really back in December with the JPM collar roll, is that generally we see a trend that continues for about 7 weeks post collar roll, which was back in December. And then from week 7 to 11, we see a correction of that trend. So that's what we're seeing almost perfectly right now. We're seeing that correction down. So this trend down could last for another 2 to 3 weeks. Going over to futures here, futures daily, I personally think show a little more bearish than SPY does. This shows to me a 1, 2, 3 roller coaster is what I coined it as, which means we have our move 1, which is down, and that's this 4160 to 3985 move. Then we have move 2, which is like a relief bounce, which we had all the way back up here to 4030. And then move 3 is a continuation of move 1's trend, which would be a move down to about 3920. So here on futures, same thing. We came down, we bounced, we hard rejected the 200 and 50 EMA, and now we're rejecting the 50 and 200 again and closed under the 100 EMA too. So this also shows quite a bit of downside continuation coming for next week. And this also could be, depending on where our candle closes and how low we go next week, could be a daily 8 EMA rejection also with the 8 and 20 EMA crossover bearishly. Taking a look at weekly here, same thing. We have this massive rising wedge breakdown. Now, I actually mentioned this happened on Wednesday or Thursday, and I called it out in the Discord and I said, look, we have the breakdown here of this massive rising wedge that is very bearish. And at that time, SPY had not broken through its yet, but now it is broken through its too. These are very, very classic signs of a big breakdown coming here. Big futures levels to watch is 39.20, which is similar to that 390.1. And then after that, I'm going to be looking for about 38.60. Taking a look at Tesla daily here. Tesla daily is kind of tough. So this 197.1 area is a big, big level we continuously bounced off of really for the last 4 or 5 trading days now. We finally opened underneath of it and we held it. However, we still have this big 192 level to think about here. So we did close our first full candle under the daily 8 EMA for the first time we've been fully under the 8 EMA since the beginning of January. However, we have a potential 20 EMA support bounce here. And you can see a similar move happen here. We have a big breakdown and a big doji and then boom, big bounce. Now, obviously, this was a little different because of the time frame and what was happening on those days. This was CPI day. So we just got to be careful. If Tesla was to lose 192, I would start being more supportive of a short. Take a look here on the weekly, kind of same thing. We did break the weekly bull channel here, obviously, as you can see. But the biggest thing to note is that this is kind of more of like a bull flag. And Meta actually has a very similar weekly chart looking here and a bull flag breakout potential. But we have this nice weekly inside candle. Weekly inside candles generally means continuation of trend also. So for me, I just don't like a short on Tesla yet. I would like to see us close under at least 197, but honestly, until we close back under 190.2 and really take out the 8 EMA or the weekly 8, 220, I think it's very risky to short Tesla. But that's our biggest support. If we do break out, we're going to be looking for a pretty big breakout to 226 area. Taking a look at the VIX here, we do have our uptrend. However, what we're seeing here, and I think this is a lot related to the zero DTE, is the fact that we're not seeing the risk stay on in the market. We're seeing huge pumps in the VIX, and then it's immediately losing it. We saw this last Friday too. We saw that on Thursday. You can see back here on the 10th. All these big wicks to the upside is people going risk on or going into puts basically. But then by end of day, they're out of them. So this happened on Thursday, actually. If you didn't see the article, it was really interesting. So apparently early morning, somebody bought about 26,000 options on 4,000 puts on ES futures and in early morning. And when they did that, we started that massive $6 drop pretty much until they took profits. And then we had a huge rally on Thursday. So we're just seeing so much zero DTE contract movement now that, I mean, honestly, we're kind of getting to a point now where we're seeing it's harder to trust the VIX. In my opinion, if it wasn't for zero DTE VIX would be way up in the 30s again with the type of move that we had down. So it's hard to trust the VIX, but so far we are trending up. Take a look at Bitcoin here. Now, Bitcoin is interesting and usually does go with the trend and sometimes lead the trend. Bitcoin is set up to close below its 8 and 20 EMA. Haven't done that since February. Now, if it breaks through this big old support line right here, this is going to start a bigger sell-off, and I'm going to be looking for the 200 EMA over the weekend. So keeping a close eye on crypto this weekend and see if we get a big sell-off or a big bounce or not. All right, hope you guys had a good week trading this week, and I'll see you guys next week.